Hedge funds advertising, Chuck. Is this what we're going to start seeing now, and why?
Well, we're going to start seeing it because it's one of these parts of the Jobs Act that nobody really understood was in there. I mean, the Jobs Act is about creating more work, and the fundamental idea is it's supposed to open a lot of private equity. We talked yesterday about crowdfunding, which is the micro level. Well, one of the things that's also happening is it's making it easier for hedge funds to reach out at the higher levels, and this is one of those things that consumers really didn't understand. And yeah, now we're going to start to see hedge fund advertising. And just imagine what would have happened if, say, Bernie Madoff had been allowed to advertise to bring in money at the time when his Ponzi scheme was struggling the most. Because that's what we're talking about.
But you're not talking about actually seeing hedge funds do like an E.F. Hutton kind of ad campaign from back in the day. I mean, are we talking like big ad campaigns? You're just talking about sort of they put a little ad out there in the paper or something, invest in this, What exactly are we talking about?
Well, I don't think we're talking about the giant ad campaigns necessarily, but I wouldn't be stunned to see hedge fund operators decide that they want to pursue something at perhaps the financial network level, or on WSJ.com or in the Wall Street Journal or on Market Watch, et cetera, because although they can only still take accredited investors, it's not reaching out to everybody, because you still are going to have $1 million or be able to show income of over $200,000. It is reaching out to folks that maybe wouldn't have otherwise had it. And the other thing that's coming out about this is that fundamentally, even if they're not advertising, the thing that might be a positive of this, a strong positive, is that a lot of fund managers, hedge fund managers, won't put anything on their website that is a disclosure. They won't really talk to the media or anything else because it could be considered a solicitation. And that's going to change under this rule. So it might open things up for the good, but this is definitely a double-edged sword.
Charlie, the other day I heard former SEC Chairman Arthur Levitt just tearing into this jobs legislation, and the various protections that investors were going to lose. Can you and this hedge fund advertising thing sounds a little bit like it fits into that category. Can you tell us a little bit more about what investors stand to lose with this?
Well, a lot of what Arthur Levitt was talking about is the crowdfunding side of things, and I've got a column on Market Watch right now that sort of talks about that issue. Crowdfunding is really sort of reaching out at the lowest level. It is you've got some coffee barista who wants to be able to own their shop or what have you, and they're trying to get funding, and they're, instead of having any luck with the bank, they're going out and reaching out to friends and family, and this allows them to sort of do a lot of that without making disclosures. So imagine yourself with, say, the spam emails you get about penny stocks, and now it will be the email that says, hey, we all know Joni, she runs the local coffee shop, she's looking to go into business, and for just a couple of $1,000 you can support her and get a free coffee every Friday for a year or something. So
sounds brilliant.
But it's done some things that will basically make it a little bit more like the Wild West, and the hope is that can be, if not necessarily regulated, at least controlled properly. I mean, the people in the crowdfunding business will tell you, yes, there's the potential for fraud, but we don't want to see it happen because it's not good for anybody.
Right now.